Hi, Jim. For your Action Alerts Plus portfolio, you've been very defensive over the last 6 months. Now we're seeing a rally build. Are you changing your strategy?
Well, first, let's talk about two ways to play defense. One is to stock selection, and the other is asset allocation. Mm-hmm. And one of the things that we did that was very gutsy was, as this market came down, we put more and more cash to work to one of those levels where we almost had no cash left. Now, as the market rallies, and time-honored with the way we like to do it, we've been taking money off in stages, and we have one of the largest cash positions because we just had a monster good rally. Still have a lot in. When it went down, we did not add to our defensive posture. We sold some Abbott, we sold some Gilead, we sold some Celgene, we sold some Bristol-Myers, we sold all our Bristol-Myers, we sold our Altria. And what we put our money into was Black & Decker yesterday, Conoco, we bought a lot of Chevron. We picked at what I regard as being the companies that will do better if things get better. We debated buying Home Depot. We didn't get a chance. But we were offensive in cash, and we got less offensive, okay, as it went up. We were defensive going in, and we got more offensive in stock selection. And I think that's exactly how I always handled my hedge fund, and I think it was great. Now, one of the things that we did was that we bought more bank. I mean, which was really like that turned out to be the most aggressive thing you did. And the dispute, the combat I had with Stephanie was over the Pepsi General Mills positions, because I wanted to build them up, and I think Stephanie correctly prevailed in saying, listen, that's not what we should be in. Not only that, but they're very big positions. And the kind of give and take that I have with a great portfolio manager like Stephanie, which is probably about maybe 40, 50 times a day, is that we could not afford to add to our defensives, because this rally is a rally which says maybe own some tech. It's a rally which says maybe own some retail. It's a rally that says own some financial, but don't build up on the drugs. The one exception to all that was our decision to buy an aggressive amount of Unilever at one level. And we did that by funding it with Altria. May I point out that Altria is actually going to be one of the stocks that raises its dividend. Goldman put out a list. So it is a little counterintuitive to sell the Altria. However, we did say if it got to 16.5, we were, as a discipline, going to take some off because we need the capital to be redeployed in more aggressive areas.
And you didn't sell all your Altria. You
still
have some.
No.
And, yeah.
But, you know, it's very important to recognize that when you have 9,000 shares of Altria and you think that the market's going to be more toward the cyclicals, that you will underperform. Now, we failed to rally as much as the market. We were about 1.3% behind the last 3 days. And I regard that as a victory because given our defensive posture and given the desire to preserve our lead, which is substantial over the S&P, had we rallied as much or more than the S&P, then I would have known that we were being far too aggressive, because then if the market retreats, we'll get killed.
Is there one particular stock that you were looking at aside from Home Depot that you're still interested in getting in at these levels?
Well, a couple. You know, we debated IBM, VF Corp, and Nike. Both wanted it to be lower. And we also looked at, do we go in and buy still one more oil? And I felt we have 3 oils. Don't need to add. But Schlumberger would have been interesting. And that was another one we discussed. That's a nice cyclical name for this point.
Thanks so much, Jim.
Thank you.